Back here watching the Money Show with me, Kavita Thapliyal, and there are a plethora of funds available in the market to invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Anand Ladda, founder, Invest Arch for Kal. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865794571. You can also email us your queries on the Money Show at etnow.tv. Anand, good evening and welcome to the show. We have the first question ready for you, which is from Mr. Yogesh Kumar Singh, and he's investing in mutual funds since 2017. He's accumulated 6.4 lakh in his portfolio. The funds that he's investing in are Mira Asset Emerging Blue Chip, SBI Equity Hybrid, SBI Magnum Equity ESG Fund. He also has Axis Blue Chip Fund, Mira Asset Large Cap, Kotak Flexi Cap is in his portfolio, DSP Small Cap, Parag Parikh Flexi Cap, Navi Nifty 50 Index Fund, HDFC Mid Cap Opportunity. So he wants to understand for how many years should he be investing so that he can accumulate the corpus of 50 lakh or more. So a lot of repetition in his portfolio and so many funds really not needed. So let's eliminate few of them.
Hi Kavita, firstly thanks a lot for having me on the show. Always pleasure talking to you. If we talk about this particular client, I think he'll be able to reach his goal, what he want to achieve in next 10 years with an expected rate of returns of roughly 12%, 11.5 to 12%. He'll be able to reach his target in next 10 years. As far as question of consolidating the portfolio is concerned, I think a good diversified portfolio can have one index fund. Probably we can choose Nifty 50 equal weight index fund. We can have one multi-cap fund, one small cap, and one mid-cap fund. I think these four funds will suffice purpose of almost 70 to 75% of the investors, and their complete equity part of the portfolio will be taken care by these four funds. So we can probably choose just four funds according to the risk profile and consolidate the portfolio a bit. Other than that, with the amount of investment which he's making, probably he'll reach his target by in next 10 years.
All right, we don't have him on the phone line, but we could have asked more on his portfolio. The kind of funds you've recommended exit from now, should he be redeeming the money now and putting in the new recommendations, or he should really wait?
Firstly, we should not take any decision in hurry. We should properly sit down and think, and at least let our SIPs continue for next 1 year, and then we should take any redemption decision. Why I'm asking for 1 year is, firstly, then you will ensure that your whatever amount you are redeeming is tax efficient. And
he's investing since 2017. Anant is investing since 2017, so he's crossed the 1 year limit.
I'm talking about new SIPs. Yeah. As far as old investment is concerned, that has to be taken care of separately. I'm talking about new SIPs. At least he need to ensure that whatever amount is invested today is staying in the same fund for at least next 1 year, and then he should make a new decision. As far as old investment is concerned, I'm very sure he has done his risk profiling and he has chosen a fund for a particular purpose, keeping certain things in mind. So he should sit down and review what was his purpose and then make a short decision, and then he should probably take a decision. And he should firstly sit down with his portfolio, with his maybe distributor or advisor, and then take a decision.
And this is the reason why our viewers send us the question, so that we can help them with the way ahead. Now, if he was smart enough to sit down with his portfolio and analyze, he could have done it on his way. But then he's given us the thing to do. So what kind of funds do you think he can come out of looking at the diversification right now?
See, firstly, I don't know his risk profile as of now, and I have not done his suitability test. I'm just answering this question from the limited knowledge and the limited information which I have right now. Firstly, I would have stopped Axis Blue Chip Fund. I would not have continued Mira Asset Large Cap Fund. Even Kotak Flexi Cap Fund. These three funds are the funds which I am not personally recommending right now. Because one index fund can take care of almost all these three funds. Final important point is Parag Parikh Flexi Cap Fund. It's a fancy fund which almost every other guy was recommending. But I feel that we need to understand that this fund has international exposure. And we should see as a investor that whether this international exposure is suitable according to a risk profile or not, and then take a decision. If international exposure is not needed, we can probably reduce this fund as well. So these are 4 funds where we can make some changes, and instead of these, we can choose a multi-cap category fund, which will probably suffice many of the purposes here.
We move on. We have Noel John from Kerala on phone line with us. Hi, Noel. Good evening. How are you doing?
Good evening. How are you?
I'm doing good. Thank you so much for sending us your query. All right. So you have started your investments, right? You've just started.
Yes, ma'am. Yes.
All right. SBI Contra Fund, Parag Parikh Flexi Cap, Quant Tax Plan, PGM India Mid Cap Opportunity, Kenora Rebecca Small Cap. You are investing 15,000 and this is for 20 years that you want to invest. You've picked up these funds by doing your own research, or you've consulted a financial planner?
No, I picked this one by my own research.
So you do understand market, do you track market, do you follow the performance of these funds that you've picked up?
Yes, yes.
You do that? Oh, that is very good. That is very good. So, what is the corpus that you want to accumulate in 20 years? What's the purpose or the goal for this investment?
Actually, I don't have a corpus in my mind currently. I'm just on the way of wealth creation.
That's fantastic, because you're just 21-year-old and you have not only just thought about starting your investment journey, but you are actually acting on it. You've picked up funds, you're investing 15,000. And you might be wanting to invest more in future as well. So, Anant, what do you have to say looking at the fund mix? It's his own research, he says.
See, firstly, congratulations that you have started investing at an age of 2021, which is really recommendable. And I'm very sure that you will have a superb journey ahead because you have time on your side, and compounding will work best for you, since you are any which ways have minimum 7 to 8 years before you look at the fund's performance. If I talk about goal, I would strongly recommend to have specific goals. Maybe right now you don't have any goals, so you can have a goal like you want to plan for your retirement, or maybe you need to buy a car, or maybe you need to buy a home. So have a specific goal. I always say that your goal should be SMART, where S stands for specific, M stands for measurable, A stands for achievable, it has to be R, that is realistic, and finally it has to be time bound. So ensure that you have a very specific goal in mind, which is achievable, realistic, and which is time bound. Time bound, you are already ensuring that you are investing this money for 20 years. So any which ways you have time by your side, but have a specific goal that will help you better in your journey. And if we talk about funds, I think your funds are beautifully placed. Just one important point which you can take care is that you are investing in Tata Digital Fund, which is a sector fund. I hope you understand the risk which comes with sector fund. And in past also, we have seen times where a particular sector has underperformed for almost 7 to 8, maybe 10 years as well. For example, if we talk about 2000, 2001, from there almost for 7-8 years, all the IT funds underperformed largely. If we talk about 2008-9, all the hardcore economy, that is the stocks which are related to economy or maybe
Tata Digital actually,
they underperform.
Anand, okay, so he doesn't have Tata Digital. Yeah, it's Noel's question. He doesn't have Tata Digital, but Noel has one more question. I think he wants to ask you on his quant tax plan also. Noel, it's very good that you are as per the new tax regime, and in spite of that, you are investing in ELSS fund, which is a quant tax plan. But because he's not taking the benefit of investing in an ELSS as per the new tax regime, and also his annual salary is 5.5 lakhs. So you think he can move out of that tax plan fund or invest in some other fund?
100%, because majority of the tax plan funds have majority amount invested in large caps, and looking at his risk profile, he need complete independence, and probably he can go for mid cap and small cap category instead of ELSS. That too without any lock-in.
Do you want to ask anything else?
Nothing, ma'am. Thank you. Thank you so much.
All the best. Good luck with your investments. We have Shivaji Basu from Kolkata online with us. Mr. Basu, good evening. How are you doing, sir? Mr. Basu?
Yes, hi.
Hello, good evening, sir.
Shivaji. Good evening. I'm fine. Thank you. How are you?
I'm doing good, sir. Thank you so much for asking. So, if I'm right, your current fund mix is Kenorebeco Emerging Equity, UTI Midcap, Tata Digital India, Parag Parikh Flexi Cap. Is that right, sir?
That's correct. Yeah.
Okay, perfect. And you've been investing since how many years?
For Canara and UTI, I've been investing for almost now approximately 3 to 4 years.
Okay.
Yeah.
Okay.
My current mutual fund portfolio is approximately, I have invested around 4.5 lakhs. My return is approximately now on an XIRR around 12.5%. And at this time, I am of age of 50, so 10 more years to go for my retirement.
Right, sir.
I am looking at a corpus of about, let's say, 50 lakhs in the next 10 years. So that's probably my target with this mutual fund investment. And I'm ready to do a step investment and increase this investment year on year.
Yeah, I think step up will really help. But then looking at the corpus that you want to accumulate, although you have written that you are investing in FTBs and you also have certain equity stocks as a part of your financial portfolio, I want to understand if this is your retirement-based investment, if these investments are aligned with that goal, would you be needing certain amount of money every month from this investment?
Not at this moment. I'm really looking at a horizon of 10 years to invest.
Post 10 years, sir. Is this investment a part of your regular income as well?
Yes. Apart from the retirement benefits, yeah.
And your monthly requirement would be? After 10 years.
It is a little difficult to predict. Probably
What is it now? What is it now?
Today, my expenses are approximately 1.5 lakhs a month.
1.5 lakhs a month. Anant, you might want to note this down. Okay. So, and you are expecting 50 lakhs, right? That's what you said?
Yes.
Okay. So, you will definitely need to step up your investments, but then how? Anant will help you out. So, Anant, looking at the current expense, which is 1.5 lakhs per month, he's talking about 10 years time now for his retirement corpus, which he says is 50 lakhs, but I think that needs to go up considering 1 lakh is the requirement per month. So how can he come to the right figure, assuming 1.5 lakh and counting in inflation in it? What will be the exact figure? Because this is a math that a lot of investors and viewers actually miss out. They are not able to count in inflation and come to a tentative approximate figure which they might need after retirement. So how can you help him?
Firstly, if you want to achieve a target of 50 lakh, he just need investment of roughly around 20. Just give me a second. He'll just need investment of around 21,500 rupees per month at an expected rate of return of 12%, and he'll reach his target of 50 lakh corpus. But if you talk about proper investment planning, assuming that his age is 50 as it is, and he's retiring at an age of 60, his life expectancy is still 80 years. And presently his monthly expenditure is around 1 lakh. I'm taking it on the lower side, 1 lakh, and I'm taking inflation at 5%. XIR, I am taking at 12% before the retirement, and at 10% after retirement, because obviously after retirement we will have to reduce the risk in the portfolio. Keeping all these things in mind, he need monthly investment of 1,12,000, and he'll need a corpus of roughly 2.6 crores. This is according to his data which he has given us. So he need to plan for 2.6 crores of corpus if you want to maintain his lifestyle, which is 1 lakh expenditure per month right now. So this is the complete calculation which we have to take care of. So right now we have two options. Firstly, we have to see that whether we are getting some more funds at our retirement. Probably sir might be having some amount in PF, PPF, which might be due, and he might get some lump sum amount, or maybe he might be getting some amount from his company. So he need to figure that out, or he will need to reduce his monthly expenditure. These are the only two options available. Else, the final option is to increase his monthly investment and try reach to that target.
For 2.6, how much his investment needs to go up monthly?
So roughly monthly investment we need is 1,12,000. Right now we are way below that line. So 1,12,000 monthly investment will be required, or lump sum we can do 79 lakhs, but that 79 lakh will be a bit difficult. So I am assuming that monthly investment will be a better option. So that figure comes out to be at 1,12,000.
Then you said 21,000 should be the approximate SIP amount every month, which can be increased in the existing funds.
Makes sense. 21,500 is the SIP
sure.
amount which is needed if we want to reach to a target of 50 lakhs.
50 lakhs, that's it. Yeah. And the
it.
increase in the SIP can be in the existing funds?
Yeah, that can be an existing fund. He just needs
So
to
the
take care
existing
that
fund mix is fine, according to you. No change needed
mix
over
is
there.
fine.
Okay.
Just we need to take care of the digital fund which we are having. That is a sector fund, and we need to understand the risk associated with that fund.
All right. Mr. Basu, quickly, my time is almost up, but then is there anything else that you want to ask Anant? He calculated your retirement corpus, which should be around 2.6 crores. 50 lakh might not be enough if this is the portfolio you are looking at for your regular income. Okay. And if 50 lakh is your target, then you need to step up your SIP, make it 21,500. The current fund mix is fine. Do keep tracking the performance of your Tata Digital Fund. Thank you so much, Mr. Basu.
Sure.
We move on. We have Sridhar from Hyderabad. Sridhar, hi, good evening. How are you doing?
Good evening, ma'am. I'm doing fine.
Thank you so much for sending us your query. And you are exiting your debt fund?
Yes. I want to exit.
What debt funds are these, sir?
These are basically short duration and kind of funds.
Okay. And you want to invest that money in equity hybrid funds?
Yes. That's what I'm looking at now.
All right. So exiting these funds might not be a problem since you have invested. When did you invest? Before 31st March, right?
Yeah, all these were before 31st March.
All right. Anant.
A balanced advantage fund as a category is very good, but you just need to understand that I know that your fund is underperforming because interest rates have risen in past few quarters. But if only returns is the concern, I think in next 2-3 quarters you might see some good upside in your fund. So you just need to evaluate that what is the purpose of the redemption, and if you have decided that yes, I want to redeem, then you have a very interesting balanced advantage fund as a category where you can expect 8 to 9% of returns with some amount of volatility because these funds will have some equity exposures. If you want to talk about funds, ICICI BAF is interesting. And if you're looking for some fund which low amount of investment or maybe low amount of EUM, Nippon Balanced Advantage Fund as a category and as a fund can be interesting to study.
Is there anything else you want to ask? Sridhar?
Oh, thank you.
All the best. We quickly move on to our last query. Madhu from Hyderabad, and Madhu says that she's investing in SBI Focus Equity and losses over there. She started investing in November 21. So very less time to give to a fund to perform. Should she hang around? Yeah.
100%. See, this is SBI Focus Equity Fund as a category. Is an aggressive fund, and you at least need to give 5 to 7 years. In past also, we have seen that this fund has underperformed at times, but bounce back have been amazing. This is a very concentrated portfolio of maybe 23 to 25 stocks at a time. So underperformance and patches of underperformance are bound to happen, but you need to give at least 5 to 7 years to the fund manager to perform. Srinivasan is a seasoned fund manager and has managed mid cap and small cap category beautifully in past for SBI. So it is too quick to take a decision.
Thank you so much, Anand, for being on the show and helping our viewers with their financial portfolio today. On that note, I also sign off, but then I'm going to leave you with our WhatsApp number and email ID where you can send us your portfolio-related queries. Thank you so much for watching. Goodbye.